Good afternoon, everyone, and welcome. Thank you for joining me today and taking time out of your busy schedule. I'm here today to discuss a really relevant topic, providing families protection today, accumulating savings tomorrow. And the focus of the presentation is using our universal life policy. We've seen a lot of conversions happening right now with our universal life product. It's a phenomenal product that can easily be used as a T100, and it really is well priced in the market, but it's also a solid contract. So what am I going to talk to you about today? Today, I'm going to talk to you about addressing your customers' needs, our Avari universal life offering, permanent insurance option and how we can utilize them, accumulation with ART versus level versus something different, and I'll address the something different, long-term investing with Avari, and last but not least, of course, providing you with the right tools to help you make those important decisions and help make your life easier when it comes to selling Avari. So what do your customers value most? At the end of the day, customers value protection for their family because by protecting their income while they're working, it helps to ensure that when a person dies, the surviving family members will have the funds necessary to cover the lost income and meet current and future financial needs. It's also, of course, very important to them to do this on a tax-deferred growth that can help protect their personal saving from financial impact or disability caused by critical illness or a need for long-term care. The power of tax-deferred growth on their investment means so much. It's more of their money that stays with them, and they can meet their wealth accumulation goals faster. So with a variety of investments, our universal life policy is able to provide your clients options. They can customize their coverage and reflect their personal investments through every stage of their life, today and into retirement. And last but not least, of course, dear and near to my heart, the ability to accumulate funds inside the universal life policy should they wish to use it as a living benefit down the road, should a rainy day occur. So when it comes to protecting families, it's important to have the right amount and the right type of insurance in place as they're paying for the protection they really need. I like to think of it as smart insurance solution that is flexible, adaptable, and it changes needs as the client's need change, literally covering the insured through every stage of their lives, today and into tomorrow. It's important for prospects to understand the power of combining life insurance with different terms so it can meet their specific needs and save money while doing that. What I'm talking about is layering or stacking a term 10 with a term 20, perhaps a base universal life policy, which can lower their cost today, but help them cover accordingly, so that the combination is customized as a solution for each individual in a different way. The question, of course, that many people have in their mind is, how much insurance do I really need? And how do I figure out what the right amount of insurance is? Well, Avari has put together a tool that's called My Insurance View, which is an easy to use interactive calculator that's web-based that will help you and your clients start a conversation about personalizing their insurance according to their needs. Again, their needs today and into the future. Even the needs analysis tool is built in a manner to start that very important conversation. There are millions of calculators out there that all do the same thing. We like to think that the Avari My Insurance View helps start that very important conversation. And by stacking up different layers, it helps you as an advisor to provide them with the insurance they need today in a budget-friendly way, and then allows you to perhaps convert the different pieces at different time in the client's life has their budgets change, and as they're able to afford more, they're able to have more to their product suite than just term, but they perhaps can have a piece of permanent. And My Insurance View lines up very well with our software. It ties in the ability to show your clients' needs, different amounts and different phases of their lives as it meets their changing and evolving needs. It can be layered onto one policy, and it's super easy to do. What's in it for you as an advisor? Well, the tool is a conversation starter. It's easy. It can help you educate your clients. You can do it with them as a one-on-one, or you can email it to them as a link and they can do it themselves. And that also can be very powerful because it opens up the client's mind as they start doing My Insurance View and they start seeing all the different layers and how much insurance they really need. Many of them are kind of flabbergasted. They can't believe. Many of them think that they should only be covering their mortgages. It's 500,000. Well, let me buy 500,000 of term 20 or term 30. But what My Insurance Views, it takes into consideration their income replacement, education for their children, other debts, and it combines them in a nice layered approach, and it helps them visualize what their needs are. So it demonstrates to the client that covering their mortgage is more than what they needed. It potentially identifies a decreasing need over time, and it motivates them to buy. And then eventually, when they need permanent, you're there to convert it, and you're able to give them a permanent solution. So at the end of the day, My Insurance View is great because it also provides your client with a visual picture. It illustrates the amount of insurance they need met by the right amount of coverage and the right amount of insurance. Also, it provides your client with a nice, neat 2-page PDF, which shows, their debts, their financial needs, what they have, and then it prepares for them what this solution is through every stage of their lives. And this is something that you can add to their portfolio, and you can add to their files, which makes you very compliant. Now, My Insurance View goes hand in hand with a very cost-effective way to protect your clients, which is combine and save. This approach allows you for your client to buy a cost-effective way to buy one policy, one single administration, and puts it all together nicely packed under one contract, and it helps them save money. What does that mean? Well, not sure if you're aware, but whenever insurance is sold or bought, it's sold in bands. So if you look at here on the screen, band number 1, if the client was to buy between 50 and 99,999,000 of face amount, they would be a band 1. If they bought 500 between 99999, they'd be a band 4. And this is really easily equatable to, let's say, a Costco analogy where, you go into Costco and you buy a queso 24 and it costs you, let's say, $3.99. Or you go to the corner convenience store and you buy one single pop for $2. So you bought one pop and it cost you $2, but yet you can walk into Costco at $3.99. You can buy a case of 24. So because you're buying bulk, you're buying in volume, you're paying less on the cost per thousand. And really, this translates the savings to your clients. And here is a case study that illustrates that very exact combine and save solution. So if you look at example number 1, my number 1 price competitor, if I was to sell 25,000 of UL, 500 of T10, 500 of T20, and 50K of T10 CI to my client with my number 1 price competitor, they'd be paying $99.81. If you did the same thing with Avari, all individually, we'd be blown away by the competition because we'd be $128.88. So almost $21 more expensive. However, if you combine and save and you do the base UL and you stock up the layers of the term 10, term 20, and the CI, all of a sudden we're $90.84. Now we're almost $9 cheaper than the competition. And we've provided the client with a customized solution that's very hard to break down. In fact, if I sell my client $1 million at term 20 on a price point, just as easily as I sold them on the cheapest price, that's as easily as they can be replaced by another advisor. Widely used price comparison software in our industry does not tell the full story. Only looking at customized individual solution, like the one that Avari offers, can the clients get the coverage they need at a very affordable price and something that's going to stick with them for long term. And it will also help build and strengthen your rapport and your relationship with your clients. At the end of the day, we're trying to provide a customizable solution that's very difficult to break down. Now let's talk about the universal offering, Avari UL. Our universal life product provides your clients with choice, flexibility, value, and the guarantees they need today and into the future. Avari Universal offers your clients the ability to buy both with bonus and no bonus, therefore providing flexibility. And of course, it's a product that provides guarantees, and it's been a very strong contract right from the start. So your clients have a choice. They can buy a bonus, no bonus. They can buy single life. They can buy a joint first to die, a joint last to die. They can buy a joint last to die deduction to first death, fund value payout on that first death. And I'll discuss it further towards the end of this presentation. And of course, they can choose a variety of cost of insurance, level cost, annual renewable term, ART, or YRT, yearly renewable term. When we talk about bonus, no bonus, one of the biggest questions I often get is, Josie, what is the difference between the bonus and no bonus? Well, Avari UL with bonus is ideal if your clients are younger and have a long-term investment outlook. Avari no bonus is ideal for clients who prefer to have a more direct connection to their investment choices over a short or long-term horizon. If your clients select Avari UL with the bonus option, they qualify for what's called an accumulation bonus, which is a fully guaranteed level bonus credited every year at the beginning, year 2. It has a fixed bonus rate of 0.75%. The performance bonus is also fully guaranteed, and it's variable, and it starts year 1. It starts day 1 of year 2, and it's based on the previous year returns and the fund value that the client builds up. So the no bonus is just simply, it doesn't give your client any bonus, but at the same time, they only pay the MERs, the street MER of the funds that are available. We have, of course, guaranteed cost of insurance. We have lots of interest options that are available. We have fixed accounts. The Avari Universal Suite is built with immense flexibility, the ART 9015, the ability to buy ART and switch into level at later years, various investment options and riders. Of course, we have something called the optimizer option, which allows your client to buy a large face amount for today with the ability to decrease that face amount, therefore decreasing their cost of insurance and being able to build fund inside the UL. And last but not least, Avari UL's flexibility comes in the shape and form that you can provide your client with what we call a blended solution, a blend of level and ART, which provides your client with extreme flexibility and the ability to build fund inside the universal life. So you can buy all level COI, your client can buy all level COI, they can buy all ART, annual renewable term, or they can buy a mixture of the two. What if I were to tell you that your client can deposit a certain amount into a UL with ART? So let's just say that we have a male non-smoker 35, they're buying $200,000 death benefit. If they were to buy all level COI, mint funded, mimicking a T100, it would cost them $1,620. Now, If I was to take that male non-smoker 35 and buy a death benefit of 200,000, and I was to utilize the $1,620 with a rate of return of 3.75, I could build what we call blended solution. So if I put the 1620 on a level COI 200,000 for a male 35, it would be all level, no ART. But what I'm proposing is option number 2 is where I'm going to give them 50,000 of ART and 150,000 of level, or 100,000 of ART, 100,000 of level, and 150 of ART and 50,000 of level. So I'm going from super conservative to a little bit more aggressive to more aggressive. But what's in it for the client? Well, I'm going to show you. Take a look at this. With 0 ART, all level COI, if I look at 40 years down the road, your client would have a fund value of 4,258 because our min funded UL is built with a little bit of a buffer so that there's some money inside just in case on a rainy day. If I was to do 25% ART, meaning 50,000 ART, 150 level, at year 40, putting in the same amount of money, 1,620, your client would have 31,166. Or if I do 50-50, where it's 100 level and 100 ART, at year 40, your client would have 56,103. And if your client was really aggressive and wanted to do 50,000 level and 150 ART, so 75% of the policy would be ART, at year 40, they would have 81,039. So as you can see, there's a huge difference in cash value comparison. Please stop by any of us. You can, pop into any of us, myself or Frank Sabrino. We would love to pick up the phone or an email and work on a case with you. Avari UL, here's the fund value. As you can see, there is a huge difference. So at the end of the day, accumulation with ART does work. Be sure to protect your universal life illustration and using conservative rate of returns or whatever rate of return your customer is most comfortable with. It's extremely important. Now, I alluded at the beginning of the presentation, a great opportunity to provide peace of mind for your client. It's called a joint last to die for estate planning, but with a deduction to first death. What does that mean? What that means is true peace of mind. If your clients are, debt-free or have very little debt and they have good cash flow, they could buy a joint last to die, premiums cease on the first death. So two insured, upon the death of the first insured, the policy becomes paid up. The risk goes on Avari, and the insurance is left for when the second person dies, then the kids get the money. This avoids a lot of fire sales or anything like that, should anything happen unexpectedly to one of the insureds. A lot of the times, when something happens to the breadwinner in the family, there isn't a lot of money for insurance, and sometimes policies lapse. Well, this is a great way to protect the insurance, because upon the death of the first insured, the policy becomes paid up and the surviving spouse doesn't have to worry about paying for premiums, and the death benefit is set for the beneficiaries. How do we compare against the competition? Well, if you take a look at here, 500,000 joint last to die, premiums to first death, male 45, female 40, we're right at the top of the rank. And also, if you look at 250,000 on a male 52, female 52, once again, right at the top. But if you're wondering if I picked some anomaly, no, I did not. Avari stacks up extremely well in the competition. We're actually number one in just about all cells, ranging from male to female, from age 30 to age 70, from 100,000 to 5 million. We pretty much got the entire space covered. This is a phenomenal way to cover your clients. Last but not least, as we were talking about accumulation and using a blended solution, a little bit of level, a little bit of YRT, or all YRT, One of the things that you can take advantage at Avari is the fund value. And I know a lot of people that have converted policies and have started to build fund value have been able to use the living benefit provision. Section 15 of the contract, the universal life contract, states that if anyone has a fund value, they can use it for a living benefit, provide tax-free and surrender charge-free access to the fund upon disability, use for critical illness, or if they have the need for long-term care. Critical illness is pretty much any of the 25 cover conditions. Disability is both covers occupational and non-OC, and for the long-term care, as long as they're not able to do 2 out of the 6 activities of daily living, then they're able to tap into the living benefit. Let me demonstrate to you quickly how phenomenal this is. Here we got a self-employed female who's 45, just starting to build a business. She's newly self-employed and finds herself without a pension or any kind of disability or critical illness coverage. So she has startup costs, and she does realize that she needs life insurance. She needs CI, she needs DI. How can we help this lady? Well, this female business owner will pay herself $100,000 a year, and would want to look at a similar face amount. So she's willing to contribute 3% of her salary until age 65 towards this life insurance policy, so that she can build fund value and be able to tap into the CI. So she's going to deposit $3,000 a year for the next 20 years. Should she, at age 55, get hit with a critical illness, she'd be able to tap into $34,915. If she's lucky enough to get, free of anything until 65, she'd be able to tap into $73,133. If she's even luckier and doesn't have any illnesses and is in need of a long-term care, she's able to tap into $120,743. And last but not least, at age 85, there's $171,000 in the fund value that she can tap in, free of taxes, free of surrender. And if you're wondering where that $171,390 comes from, it's the fund value minus 3 months cost of insurance. Now, last but not least, we're going to focus on some investing essentials that include the importance of long-term investing, utilizing dollar cost averaging, creating a strong portfolio through diversification, and finally, asset allocation. These are all proven investment strategies that together can help your clients reach their long-term financial goals, particularly within their Avari Universal Life policy. At Avari, we have daily interest options, we have fixed rate interest options, passive index interest option, and managed index interest options. Also, at Avari, you can take advantage of the monthly withdrawal of monthly deduction, which basically means that Avari clients have long-term life insurance protection with access to their investment, and they're able to use a particular fund to pay for their cost of insurance while using the rest of the money to grow within their investments. Dollar cost averaging, I don't have to tell many of you, is a true and tried investment technique where clients contribute a fixed dollar amount towards their plan on a regular basis, regardless of price of the investment. And by investing smaller amounts on a regular basis, they don't have to worry about investing larger amounts at the market peaks or missing the opportunity when the prices are low. So, and by using a pre-authorized pack, you can ensure that every month you can do dollar cost averaging and take advantage of that feature automatically. We have a large selection of quality active managers. You can find all of these at avari.ca. Simply, you go to avari.ca, you can have your clients go there. They don't need a password or login. They go under resources, under fun fact pages, and they're able to pull up any of the active managers PDFs with all the information, the MERs, and now they're netting free of option fees and what their returns are. So at the end of the day, Avari Life Insurance provides your clients with choice, value, guarantees, and flexibility. And at the end of the day, we're here to make your life easy. So the tools that are available at avari.ca for you as an advisor are My Insurance View, Easy Needs Analysis, My Investment Profile. It gives you the ability to sit with your client and find out what their risk tolerance is. Avari 360. Since last Monday, we've now launched an end-to-end solution where you're able to create the illustration and the software, run the application all on the same platform, and be able to take advantage of different abilities to structure your illustration in any way you want, then save it into the application. And it's all web-based, and you can do it from your iPad, your tablet, anywhere you like. We have prospecting support available to you, and also, of course, the flexibility to do CE credits online. Should you require our assistance, myself and Sharon are your brokerage sales team for the GTA and Northern Ontario. And if you're in the Southwestern Ontario, you got Frank Sabrino along with Sharon as well. Here's our details. And last but not least, I like now to share a quick video to introduce our brand new Avari 360 that was launched on Monday, integrating both our software along with our illustration and our application. So here you have it.
Avari 360 is now fully integrated with new business illustration. With a single login, you can work seamlessly on any device, anytime and anywhere, and never have to download again. Avari 360 offers a simple flow with new illustration tools, like Quick View provides a snapshot of what is being illustrated and the key values. Coverage at a glance provides a preview of your illustration. Use it to do quick comparisons with other scenarios. Product Comparisons provides quick term and critical illness standalone quotes. Ivari 360 offers many easy-to-use functions, allowing you to copy and compare illustrations, customize your view settings, and build a collection of illustration templates. Everything you need on just one platform. Register for an Avari 360 orientation at avari.ca/360.
And that is it for me. Thank you for popping into my webinar and joining me today. It's been a pleasure, and look forward to seeing you live real soon. Thank you and take care.